Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage-eitel.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And you are in the right place if you want the data. I mean, the real data, the information, the tips, the tricks, the strategies that you need to make better real estate and mortgage decisions for you and your family. I mean, there's a lot of crazy headlines. We always dive into them, and we're going to do that here in a minute and kind of debunk them and give you the truth, if you will, or at least the data that is behind the headlines. And then we're going to answer all your questions too. And let me throw out the new Anytime hotline, 855-462-7292. That's how you get your questions on the air, 855-462-7292. In the studio with me today is Dom, my producer, and he is manning the Anytime hotline. That number again is 855-462-7292. So if you have questions, shoot them over, call or text that number, and he will get them on the air. But, man, I had a lot of questions this week regarding, is it still a good time to buy? And we're going to dive into all that and some strategies around, maximizing the opportunities that are in the market. But before we do that, I always like to poke fun at the headlines, or at least kind of poke holes in them so we can find the truth. And here's one more example of what I mean by that. So there was a publication on, I believe it was Wednesday. I posted this to the Facebook page, and that page is The Mr. Mortgage Show on Facebook. If you ever want to find all the data and information that we use for the show, I post it there each week. But Realtor Magazine had 3 headlines published on the same day, and one of them said, slowing inflation indicates that mortgage rates have topped out, not tapped out. They've topped out. Some buyers have tapped out because of the rates. But anyway, here's my point. Same publication, same day, mortgage rates rocket back over 5%. So the first article says the rates have stabilized. On the news that last week, there was big headlines. They fell below 5%, which they did for about 3 hours. And then here are 2 contradictory headlines in the same publication on the same day. And that's what I mean. If you're walking around out there just reading the headlines, you really have no idea what's going on. And you've heard me say it before, just reading the headlines is kind of like watching the odometer on this on your car's dashboard. And you have an idea of what direction you're going in. You have an idea of the fact that the car is running, but you have no idea how fast it's going. And that's kind of what these headlines are doing. There's truth to the headline, but it's often misleading. It's really just to grab your attention. So anyway, I found that super interesting, and I did post it to the Facebook page because here we go. Same publication, same day, contradictory headlines. But there was a lot of news this week around housing inventory jumping up and suggesting that more inventory coming to the market is triggering a transition from a seller's market to a buyer's market. And you've heard me talk in detail about supply and demand. So if you've heard this show for the last several months and you've heard me preaching supply and demand, and then you read this article that says active listings rose at a record high rate in July. Now all of this data is always looking back. That's why it's referencing July. And it goes on to say that July's monthly housing trend report found that national inventory of active listings rose by a little over 30% year over year, while the total inventory of unsold homes, including pending sales, increased for the first time since September 2019. Now, you read that headline, there's a lot of mortgage rate headline bouncing around out there. Builder sentiment is low. Buyers are, kind of cooling their heels. They're not rushing to the market. And then here's another headline suggesting that, the market is tipping and we're moving into that quote unquote crash cycle. But keep reading the article. It says, however, the bump in total unsold inventory amounted to only a modest 3.5% due to a dip in pending inventory. So inventory was down to begin with. So this big number that they're talking about only moved the needle 3.5%. And it said listings are still far behind their pre-pandemic and even their early pandemic levels. Active listings are 15.7% below 2020 and 45.4% below 2017 to 2019, which was arguably a normal market. Actually, we had a super healthy economy during that time period and all-time low unemployment. So that was a very healthy economy and a healthy market. And we're 45% below that. So I'm sharing all that only to suggest that there's no major run-up in inventory that's going to tip us into a buyer's market, at least not yet. We're watching all of this because there are definitely changes. We're seeing more homes come to the market, and we're seeing much more opportunity for buyers to negotiate, which I think is super, super encouraging. But here it says at the same time, newly listed homes fell by 2.8% year over year as consumers begin to think it's a bad time to both buy and sell. And I just found that super interesting, although it says more than 60% of people still feel that it's a good time to sell, a little over 60%. And they quote, unfavorable mortgage rates have been increasingly cited by consumers as the top reason that they're backing out of the market or considering it a bad market, which is mind-blowing to me, because how an interest rate in the fives is considered unfavorable just blows my mind. And, I did some research around that. I kind of was Googling around and trying to find an answer for that. And there's a psychological term called the recency bias. And that means the most recent data that you have usually carries the biggest impact. So people are remembering 3% and home appreciation in the double digits, sometimes month over month. Their recency bias is conditioning them to think that's normal, and that a 5% or a 5.5% or a 5.25%, or if you got lucky and locked last week, which we were able to lock some clients under 5%, that's an unfavorable rate. And that's just mind-blowing to me, because I seriously think it's the recency bias. It's just like right now people are excited that gas is $3.75 a gallon. And it's because we're remembering nearly $5 a gallon just a month or so ago. And we're forgetting the $2 a gallon gas from 2 years ago. So I think that's what's having a big effect on people mentally, is they're remembering those all-time rates, all-time low rates, and they're thinking they're going to go back down. But guys, I have sad news for you. I don't think we're going to see that again in our lifetime. Just remember all of the global events that had to line up for that to happen around the pandemic and shutting countries down and economies down. That's what drove rates down to that. So, if you're suffering from recency bias, sorry about that, look past that. Try to jump back a couple years mentally, because the reality is a 5% or a 5.5% interest rate is amazing. And just to continue on the topic for a minute of inventory, because that's the only thing that's going to trip prices. Housing starts, housing permits are down, and we're going into a period of time where seasonally they adjust downward because a lot of the country doesn't build as aggressively in the winter months. So I'm not seeing this big surge of inventory coming to the market, because a lot of people like where they live. They've got a load of equity, and they've got one of the historically low interest rates. I don't know that they're that excited to sell. And if you're thinking foreclosures are going to bring the inventory to the market, I don't think that's the answer either, because we're at 165,000, give or take, foreclosures right now, which is a big jump from last year, 65,000. But we are below where we were in 2019, which was 296,000, so almost 300,000. So roughly half of the normal foreclosure activity. And again, 2019 was a scorching hot economy with, record low unemployment. And even then we were seeing 300,000 foreclosures. So I say all that just to encourage you. The housing market doesn't look like the bubble is bursting anytime soon. And if you're considering buying or selling, it's probably now still a very good time for you. So I say all that to say, stay encouraged. You hear the music rolling up behind me. That means we're going to jump into a short break. On the other side of this break, we're going to get to your questions. So hang in there with us for 2 very short minutes.
Buying Selling a home can be stressful. Willow Title Services will help you close the deal. Offering tailored services for your unique home buying needs, you'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience. So trust the closing experts and contact them today. Visit willow-title-services.com. That's willow-title-services.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you heard Ike, the announcer. 855-462-7292 is the brand new toll-free anytime hotline because, as you may or may not know, we've expanded the show and we now have listeners in several area codes. So we're super excited to welcome everybody to the party. And we made it easier to get here by just calling or texting 855-462-7292. Hey, and before the break, I was, talking about that article that was referencing, increasing inventory. And it's interesting because in that same article, it states that year over year appreciation is still high double digits at almost 17%. And I've read some data that shows it at like 18.8 or 18.9%. So, I mean, guys, the prices are still going up. Interest rates have stabilized. You've got to make the decision for yourself. I was thinking about this on the way in today. Hey, Dom, when you're jumping on 95 and you're merging, do you go faster than the traffic or slower than the traffic that you're joining? Are you moving faster or slower? I know the kind of car you drive, so I think I have the right answer, but what do you do? Pedal to the metal?
Faster.
Okay.
I'll just say that.
Yeah. Dom goes faster than everybody everywhere, guys. But hey, I was thinking about that because the guy in front of me was going slower than the right lane on traffic, and I was jumping on 95 to come into the studio to do the show. And it got me thinking about speed and decisiveness. And here this guy was going super slow and super indecisive. And he darn near killed all of us. I mean, I swerved into the far right breakdown lane to just avoid getting hit from behind by the guy behind me. And I share all that just to say real estate and life decisions are kind of like that. You've got to make your decision in the real estate world anyway. Look at your budget, and if the budget makes sense and you find a home you like, hit the gas and get moving, because just like Dom, you're going to get into traffic a lot easier if you have the pedal down. And in life, you have a tendency to be more successful if you're just decisive. Don't be foolish. Don't be fishtailing all around and swerving and smash into the center divider, but definitely be decisive, find your place in line, and then go. Because I witnessed it firsthand this morning, how indecisiveness and speed, the lack of in this instance, really almost cost everybody. And I know that's a crazy analogy, but if you listen to the show often, I think in pictures, and that just kind of stood out for me because I hear it all the time from clients. they talk about the cost of this decision they've made. I'm putting 5% down. The house is $500,000. That means I have to come up with $25,000 plus closing costs. Is this the right decision? Everybody is super good at calculating the cost of making a decision, whatever it is. We know how far we're going to have to reach in our piggy bank to make something happen. But what people are terrible about is the cost of inactivity, calculating that. So to use the example from this article of appreciation still in the double digits, I did some quick math during the break, and at an 18% appreciation rate, because that's what the CoreLogic report said, it's kind of halfway in between everything that I shared. If you bought a $300,000 house last year, and guys, there were a lot of people last year saying the bubble's going to burst, this is a bad time to buy. So arguably people were even back then questioning the validity of the market moving forward. A $300,000 house last year would have earned you $54,000 in equity. And I say earn you because that's money for you, for your future, for your family. You have access to that if you sell, if you refinance. We talk about it all the time. More and more people are starting to look at refinancing as rates are in the fives and their equity lines are jumping because the Fed is out there swinging a big bat, raising the interest rates at almost every meeting lately. So food for thought. Calculate the cost of inactivity. What's another year in that apartment going to cost you? What's another year in that duplex going to cost you, that rental house? If you can afford it, don't get hung up on that recency bias that I talked about in the first segment. Rates are no longer 3%. They're probably never going to be 3% again, at least not in my life. I can't imagine what would have to happen globally for that to take place. But just realize there is always a cost of inactivity too. And the guy in the white Kia this morning proved it all to us when he was getting on 95, because that was a heck of a defensive maneuver that a couple of us did to get around him. So anyway, on with the show. So we always answer your questions, and I'm going to throw it over to Dom, who is the speed racer of the group, and get some questions on the air. What do we have, Dom?
Ron is asking, is a rate buy down and discount points the same thing? I Googled it, and I'm not sure how it works.
Hey, Ron, thanks for that question. We're seeing a lot of rate buy down right now, or at least a lot of conversation around it. And yes, you buy the rate down with discount points. So one kind of leads to the other. And how it works is, and here's another huge misconception in the world of real estate finance. A lot of people assume and I've heard some very, very well-respected real estate professionals share this, and it just always makes me scratch my head. They think 1% of the loan amount, so a $300,000 loan, paying $3,000 will buy the rate down 1%. That's not how it works. It's not a 1-to-1 ratio, but a discount point or an origination point or a lender point is 1% of the loan amount. So to buy the rate down a full interest rate, depending on the loan program, depending on the day, because it's always different, you're working within a very specific set of parameters, the rate sheet of that day, specific to that lender, it could cost as much as 3 or 4% to buy it down a full percentage point. And when you hear a rate buy down strategy, right now, a lot of people are talking about that around the seller buying the rate down for you, the buyer. And how that's working is let's keep that same example of let's say you're buying a $300,000 house. That's what we just referenced a minute ago. And the seller's willing to take $290,000, so he's going to take $10,000 off. Instead of writing the contract at $290,000, it may make more sense to write it at $300,000 with a $10,000 contribution. So the contract will read something like this. Seller contributes $10,000 towards buyer's closing costs, third-party fees, non-allowables, and rate buy down. That way you can use the money however you need on your side of the transaction, and you can take that $10,000 and apply it towards buying your interest rate down. And we're seeing more and more of that. You hear me talk all the time about how a really great real estate agent in your corner can make a difference. And this is one more example of that, because if they negotiate the price down, right, to $290 in that example, and there's a conversation to be had there. Is that $10,000 best used as a discount or best used as a contribution to buy your rate down? And a seasoned, really great real estate agent can make that happen for you. So anyway, that's how it works. And you're hearing a lot of people talk about it right now because there's a willingness again in the market for sellers to negotiate and help the buyer make the deal work. And lowering your interest rate a 0.5 point, 0.75 point, that's a significant savings over the life of the loan if this is your forever house. So I hope that helps. I hope that gets your question answered. You put me on the spot with some math, but that's pretty much how it works. So, hey, I'm going to see if we can throw it over to Dom for one more question.
Carol sent this one. We received an escrow shortage letter and our payments are going up unless we pay a lump sum. Is this legit? They're saying our insurance premium is jumping.
Hey, Carol, sadly, that is legit. So what happens is if your insurance premium jumped up and they liquidated your escrow to pay your insurance, now that budget is negative, or at least forecasted to be negative, because they're not going to have enough money to pay that higher premium next year. And they might have gone in the negative to pay it for you this year. So they're usually going to jump your payment up or allow you to make one big payment to seed the escrow account to bring it up in accordance with paying next year's insurance amount. Here's the cool thing. You don't have to stick with that insurer. And we've got some insurance agents that we're working with who are getting super aggressive. And I don't know how they're doing it, but they're keeping the coverage the same, but they're saving clients a considerable amount of money. And we're seeing it on the front end as we're helping them get into the mortgage. So we're seeing a wide variety of rates being quoted. But that's a big thing right now. If you need help with that and you want a referral to a good real estate agent, call us off the air. I'll make that happen for you, get you in touch with somebody, because you're not married to that insurance policy, even though it's part of your mortgage payment. So, hey, you hear the music? Dom's waving the flag over there and giving me the finger. That means we're going to go into a break. We'll be right back in 2 short minutes.
Buying your home is likely the biggest transaction you'll ever make. With stakes that high, you need certainty. Willow Title Services strives to take the stress away by providing a single point of contact with clear communication, resulting in a painless and positive experience. Willow Title Services has over 50 years in industry-leading and closing techniques, rooting them in the experience needed to get you to close. Call Willow Title Services at 561-737-1630 or online at willow-titleservices.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
Oh, all right. We are back. My name is Mark-eitel. You are listening to the Mr. Mortgage Show. And that's right. Questions, you can call or text them to 855-462-7292. That's 855-462-7292. You can visit us on the web, too, and submit them via email. Just go to www.mr.mortgage. That's right. There's no .com. Just type in mr.mortgage. Boom, there we are. On the upper right-hand corner, there's a Contact Us button. And you can submit your questions there. Dom's also watching that. So, hey, on the way into that break, I was finishing up with Carol, and a lot of people don't realize that you can change your insurance company, even though it's part of your mortgage payment. It's easiest to do it upon the time of renewal, but you can do it anytime. And it's not that difficult. There's a few moving parts. I'll be happy to walk you through it. But right now, a lot of people are shopping their rate because they're as surprised as Carol is when they're getting that letter in the mail. And rates, insurance rates right now are the loose cannon in real estate because the premiums are jumping quite a bit. So hopefully that helped. But hey, before we keep rolling, coming back from that commercial break, I heard the spot for reverse mortgages. So because people have a lot of equity and they're getting pinched by inflation, and I know the inflation report was 8.5% this month and everybody jumped up and down like we're turning a corner. I'm not so convinced yet. I read the data. I dig past the headlines. And the only category that really fell was fuel. And hey, that's another reason why fuel was never the responsibility, or Russia was never the reason gas prices were where they are, because there's no more fuel pumping out of Russia now than there was at the beginning of the war, but yet prices are coming back down. So another example of how supply and demand control the market. And as consumers have curbed their behavior, carpooling, sharing the car. Mrs. Mortgage and I did it by accident the other day, and I thought, hey, this would work if we had to do it every day. She was wanting to go to the grocery. I was wanting to go to Home Depot. We jumped in the car together because we wanted to have breakfast together. I dropped her off at the grocery. I shot over to Home Depot, got what I needed, came back to the grocery, met her inside. We finished shopping together, and we did all that with one car and one trip, where in the past that would have been 2 cars and 3 trips. So interesting. I think consumer behavior is what's controlling gas prices, but that's not the moral of the story. I heard the reverse mortgage commercial, and Willow Title is closing reverse mortgages for me now. And you hear me talk about them all the time. I've had Heather in here. I'm going to have her in here again, but they are rock stars. So I just wanted to give a shout out to willow-title-services. And if you have questions or comments, or, curious about title issues, give them a call at 561-737-1630, or check them out online at willow-title-services.com. But it just made me think of that because in the world of reverse mortgages, there's a lot of questions. It's a slower process, and you need somebody on your side that's not, pushing the clock across the table and trying to hurry you through the transaction. And they're awesome. They have the heart for it. So made me think of them and just wanted to call them out as the rock stars that they are. So let's keep the questions rolling before I turn this into a ramble-a-thon. What do we have, Dom?
Matt sent a text. How fast can I get approved? I found a house, but they want my approval before they accept the contract. You're my guy. How do I get started?
Hey, Matt, thank you for that, brother. I appreciate it. I look forward to working with you. I certainly appreciate the opportunity. We can move fast. I don't know that we can move as fast as Dom when he's getting on the highway, because my man does push his foot through the floorboard. I've seen it. But yeah, we can move fast. So to answer your question, typically 24 hours, sometimes in the same day. It really depends on how fast you can submit your documentation, because you've heard me talk about it before. There's a lot of levels, if you will, of an approval. And in the past, everybody just was looking for a pre-qualification. And a pre-qualification is easy. You tell me your credit score, you tell me your income, I do the math, we talk about your debt. I say, hey, based on the information that you've provided, now that's the key, you've provided it, I've not yet verified it, I say you're pre-qualified for a loan of X. Now, that's predicated on all that information checking out to the penny. So that's the first step, pre-qualification. And, 5 years ago, that's all anybody wanted to see out in the market. And if COVID's done one thing, it's conditioned us to be ready to make that decisive move. That's why sellers are asking for approvals. They want to know that you're capable of pulling the trigger. So a pre-approval is I've reviewed your credit report. So we've actually pulled the credit. We've reviewed it. We've gone through it with you. So we have an accurate picture of your debt. We've reviewed your income documents, either your pay stubs or your W-2s. And we've reviewed your bank statements. So we know your asset position. So we have real data. That's a pre-approval. Most of the time, that's rock solid. unless something changes or there's something unforeseen, like, some judgment that pops up in the process. And then lastly is you'll hear people ask for a DU or LP or AUS approval. And DU and LP, basically, one is for Fannie Mae loans, one is for Freddie Mac loans, but AUS is for both. It's the automated underwriting system. And what that means is you've been run through the underwriting system and you've got findings, which with those findings, we can place that loan, or any broker, any lender can place that loan either in a Fannie Mae or Freddie Mac pile and get you funded. That's the strongest level of pre-approval. Lastly is a fully underwritten approval, and we just need to plug in a property. I say all of that just to share with you that there are levels and layers of this, and it's, the pre-approval itself is a pretty fast process. If you've got your bank statements, your W-2s together, you can go to www.mr.mortgage and hit the Apply Now button. And I know it's Saturday morning, but, if somebody's in the office, we could do it today. But realistically, if you've got that information together, we can get that out for you typically in 24 hours. So thank you for letting me be your guy. Give us a shout if you have questions, but hit the website and you'll find the Apply Now link and we can get this thing moving for you fast. And if you do it this morning, we've got people in the office so we can respond today for you. So hopefully that helps. I'm going to throw it over to Dom for another question.
Brittany is asking, I like the idea of a Rec Refi, but I have a crazy question. We want to pay all of our debt, including the equity line. Can we keep the equity line open?
Brittany, is it wrong that I want to say, oops, I did it again? Yeah, every time I sing, Dom looks uncomfortable back there. That's why they let me play the drums and only the drums. There's no microphones around me when I'm in the studio with the band. But anyway, Brittany, that's a great question. And logically, I understand what you're trying to do. And theoretically, if all the stars line up, you could do that. But most of the time, the answer is no, because your second lien, your HELOC, your equity line, is in second lien position behind your current lender. And when we refinance that current lender, there's protocol required for that HELOC to be second lien position behind the new lender, and most of the lenders just find that cumbersome and don't want to do it. The second part, the second reason why that may not work is your HELOC, your equity line, is based on your available equity, and we're going to now increase your loan amount by paying everything off. So you may not have as much available equity to qualify for that equity line. And that may take a re-underwrite. It's certainly going to take a modification of terms for the equity line. And then lastly, this may be why it doesn't work, is because the new lender is going to underwrite you to a maximum loan to value, and that HELOC may exceed that if they're combined together. So what typically is the easier process. I say process for my friends up north, but the easier process is do the cash out refi or the Rec Refi in this case, which is definitely the way to go if you want to pay off debt. And for those listeners who don't know what a Rec Refi is, Rec stands for Reduce, Eliminate, and Consolidate. It's a debt consolidation refi product that we offer. It's a little bit streamlined, a little bit there's a little bit of fee savings in it because it's designed to maximize the cash that you're able to pay debt down with. So where I'm going with this is typically what will happen is you'll do the Rec Refi, get everything paid off, and then go get a new equity line of credit, because the equity lines typically have no closing costs and they move rather quickly. And the ones that do have closing costs may even be absorbed by the bank or at least financed. So if you need help with that, give us a shout at 855-462-7292. I'll be happy to answer any questions you have around that. But you hear the music, that means we're going to run into another short break. We're going to be back in 2 minutes to take more of your questions. And get those questions to us at 855-462-7292. Thanks.
New to to South Florida and ready to sit down roots with a new home? Willow Title Services makes closing a smooth, painless, and positive experience. With individual service for each buyer's needs, Willow Title Services has a combined 50 years plus of experience with industry-leading closing techniques. Call Willow Title Services today at 561-737-1630. That's 561-737-1630. Online at willow-title-services.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show, and you are in the right place if you want the data, the news, the tips, the tricks, the strategies to go out there and make better real estate and mortgage decisions for you and your family. And we've had some great questions today. We talked about the rate buy down, which I really like that strategy moving forward, and sellers' willingness to make that happen right now by contributing a little bit is super helpful. So yeah, let's oh, hey, before we throw it out there for more questions, I do want to say this. You hear me all the time talk about the data. You know, I've referenced 2 or 3 decent articles this week already. Check out the Facebook page. Go to Facebook and search the Mr. Mortgage Show. All the data is there. And we're going to compile everything into one website, if you will. So you can go to the website and go to Facebook, go to the Mr. Mortgage Radio Show. Everything will be in one place. So we're working on that for you. But all the data is on the Facebook page at the Mr. Mortgage Show. And if you like what you hear and you want more of it, somehow, I think my mom's the only one that ever wants more of it. But check out MrMortgageRadio.com, MrMortgageRadio.com. Each week when the show's over, Dom uploads the recorded version as a replay, and we do a daily podcast once in a while, so everything is there at Mr. Mortgage Radio. And then lastly, if you want to learn more about me or the company or reach us during the week, you can always visit www.mr.mortgage. That's mr.mortgage, never a .com, just www.mr.mortgage. So with all that being said and the housekeeping out of the way, I'm going to throw it over to Dom for another question.
James sent a text. Can I do a cash-out refi on my Virginia house and use that money as a down payment for a condo in Florida?
Hey, James, that is a good question. And the answer is yes. You can do that. I'm assuming that Virginia is, and I don't know, maybe this is not a safe assumption, but I'm assuming that Virginia is your primary residence and this is going to be either a vacation or a second home. But a lot of people do that. And because you're cashing out that equity, that's your money. It's, that's your equity. So you can certainly use it for a down payment. And the only thing is that, the new loan amount carrying that equity cash out and naturally the mortgage on the condo, all of that is going to be counted against you. Where people get into trouble with that strategy is if they take unsecured funds. So, you get a personal credit line at the bank and you want to, pull $100,000 out and pluck it down in your account. and then use that for the down payment. That's more challenging because it's unsecured funds. You'll need that to sit in your bank account for a while so that it's quote unquote seasoned. But large deposits like that require explanations anyway. But your strategy is sound, and it should work without a problem, assuming that your income can support all of that debt. Just know that the interest rates for second homes and the interest rates for condos are typically a little bit higher, more so for second homes because of the risk associated with second home loans, because a lot of people were buying investment property and calling them second homes. So an investment property is riskier than a second home, which is riskier than a primary residence in the lender's eyes. And then condos are priced a little bit higher on the interest rate side right now because there's a little more risk associated with them. And it's all around the condo questionnaire and what happened in the condo collapse down there in Surfside at the Champlain Tower. So that's all still shaking its way through the lending industry, but we are seeing slightly higher interest rates for condos and definitely for second homes. But to answer your question, you can definitely make that happen. So hopefully that helps. If you have more questions around that, just give us a shout during the week. But let's keep the questions rolling. What else do we have, Dom?
Lucy sent an email. I read that rates are back below 5%. Do you think they will keep going back down?
Hey, Lucy, you should have been here yesterday. Apparently you didn't hear the opening segment of the show, and I get it. Not everybody tunes in for the entire hour, but rates are no longer back below 5%. That was just a very short-term dip, and it was basically one day in the world of interest rates, and it was just a few hours in that day. And that's the challenge of the headlines, right? By the time something happens and somebody can turn around and tell the next person, and that person can turn around and tell somebody in the office who types up the article and hits submit and then prints it out and hands it to the person on the news and they read it to you. I mean, that's already happened, and it's old news by that time, especially in the world that we live in today. So I'm not saying that to be mocking. I saw all the headlines too, but those interest rates are back above 5, and I really don't see any downward pressure on interest rates anytime soon. Like I said before, I don't think we revisit the world of 2 and 3% money, at least not in the foreseeable future. So, kind of reminds me of, I grew up here and I would go surfing all the time. And by the time you get to the beach, there'd always be that guy that said, "Hey man, you should have been here 2 hours ago. It was head high and glassy." And, we're paddling out in waist high wind chops. So yeah, Lucy, you missed it. I missed it. A lot of people missed it. Well, I missed the surf. We did lock some interest rates below 5, but we just did it on that one day where we caught the dip. So hopefully that answers your question. Check out the Facebook page. Every day I track interest rates on there, and I publish the interest rate tracking data. So that Facebook page is the Mr. Mortgage Show on Facebook. But Lucy, thank you so much for that question. And if rates get down below 5 and stay there for any amount of time, you'll hear about it first on that Facebook page. So thank you for that. Hey, Dom, what else do we have?
Sydney is asking, how long is a mortgage approval good for? I'm not in a hurry, but every time I start to negotiate, the realtor is asking for my approval.
Hey, Cindy, that is a great question that we get often. And it's, back to that, well, let me answer your question first. So typically your credit is going, the approval is going to last as long as you keep the documents fresh and you don't change anything. You don't, quit your job and you don't go out there and buy a car, as long as your debt load stays the same and your income stays the same. And we advise everybody after an approval, stop. Don't go out there and buy furniture or, finance anything. Don't apply for new credit because you don't want anything in your profile to change. But typically 90 days, I guess, is where I'm going with this. And after 90 days, your credit needs to be updated. And it's just, typically a soft pull to confirm nothing in your credit profile has changed. And as long as you keep providing the most recent bank statement, so if you're 30 days into your approval, logic dictates that you'll have another bank statement by then, or another pay stub or two during that time period. just keep each month providing the most recent information, and your approval can last as long as you need it to last. But every 90 days, they're going to, take a peek at your credit. And when I say that, it's not a full hard inquiry that's going to lower your score. It's merely a recertification of your credit, if you will, so that the lender is comfortable that your credit profile hasn't changed. But I get it that it's super frustrating because I hear this from a lot of people. But, again, you heard me reference growing up down here surfing. I also was blessed to have a stepfather who took me offshore fishing and a dad who took me out on the lake. So I've got a lot of good fishing stories too. And here comes one of them. Have you ever been offshore fishing and you're looking for a weed line and you spend hours offshore running around? You're looking for a weed line because you want to drop bait and catch dolphins, start trolling. You're all ready to go, but you forgot the bait. You're not going to run all the way back to the dock to get your bait and get your rods. You're prepared so when you find the weed line, you can drop the bally and go and start catching fish. That's kind of the same mentality. If you're up north and you're listening to us, maybe it's a hunting analogy. You're not going to sit in the tree stand all morning, and then when the big buck comes walking by, run out to your truck and get your gun. You're ready so that when you identify the property, you're pre-qualified, pre-approved even. That's better. AUS approved is even better. So then, boom, you can pull the trigger and make an offer. And that's what the agents are looking for. And that's a product of coming out of COVID because things were selling so fast. You didn't have time to run to your truck or run the boat back to the dock and get the rods and the bait because, that weed line wasn't going to be there when you went back out. So anyway, I hope that helps. But to answer your question, 90-day cycles on the approval and then a refresh of your credit. But keep your documents current, and that's going to make everybody able to move faster for you on your behalf when you do identify that property. But hey, thanks for that question. And you hear the music rolling up behind me. You know what that means. 2 minutes without me. Sit tight. I know it's going to be hard, but we'll be back in 2 short minutes. Thanks.
Buying a home can be stressful. Willow Title Services will help you close the deal. Offering tailored services for your unique home buying needs, you'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience. So trust the closing experts and contact them today. Visit willow-title-services.com. That's willow-title-services.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show, and hopefully that 2 minutes wasn't too long for you. Thank you for hanging in there with us. If you have questions and want to get them on the air, call or text 855-462-7292. That's 855-462-7292. That's the brand new shiny toll-free anytime hotline. check us out online at mr.mortgage. That's www.mr.mortgage, never a .com. Just try it. Go in there and type mr.mortgage, hit enter, and then voila, that's where we pop up. So, hey, we're super excited to be with you every week. We've had some great questions so far, and let's keep the questions rolling. I'm going to throw it over to Dom and see what he has teed up.
Rick sent this text. Do we get a better interest rate if we have high credit scores? How about if you put more money down?
Hey, Rick, that is a wonderful question. So the higher the score will give you access to more programs. So in theory, yes, there are some loan programs that require a higher credit score. Now, the credit scores move in tiers. So a 680 versus or let's say a 681 versus a 683 or a 691, that spread's not going to make a big difference. A 690 to a 723, now you've broken that 720 threshold. That may open up access to some additional loan products that have premier pricing. So in theory, yes, always the better credit score, the bigger the down payment, the more favorable the loan. Now, on the down payment side, that's less of an effect, but sometimes does have an effect. But where it does have a big effect is on the mortgage insurance. So if you're putting 20% down and you can forego mortgage insurance, that saves a big chunk each month. So in theory, yes, to answer your questions, a higher credit score or a bigger down payment is going to give you access to a lower monthly payment. So I hope that helps. If there's additional questions, I'd love to just have a quick conversation with you because I have questions for you around that. But give us a shout during the week and I would be happy to give you some more information. So that was a good one, Rick. Thank you so much for that. And hey, we're at my favorite part of the show where I ask for a favor. If you guys have enjoyed any of this and if it relates or resonates or you think somebody could benefit from it, please share the show. As I mentioned, Dom puts the recorded version of the show online as a podcast every Saturday afternoon. And just go to mrmortgageradio.com and all of the episodes are there. Share the show with somebody. I would be happy to help them, happy to answer their questions. If you've got some friends or family or coworkers, you're sitting around the barbecue on Sunday and somebody has real estate or mortgage questions and you think they could benefit from it, introduce them to us, introduce them to my team. I would be truly honored. Hopefully I can count on you for that. So thank you for that. And I want to give another shout out to Willow Title. They are one of our premier sponsors. Willow Title is an awesome company, awesome people. I'm going to get Heather back in here because you guys don't know this, but she's about to be a published author, and I want to learn more about that. And we already know she does good deeds in the community. So Willow Title Services, you can check them out at willow-title-services.com. And I'm looking forward to hearing how their headshot happy hour worked out because I thought that was a pretty cool fundraiser. But yeah, we've had a great time with you so far. We've had a lot of good questions. We talked, Rick was asking about credit score and down payment, how that affects things. Jumping back, I think it was Tom who was wondering how the interest rate buy down works and using discount points to get a better rate. It was Matt that said, I'm his guy. I'm super excited when we get off the air, Matt. If you need me, give me a shout. I know Dom already shot you back an email, so hopefully we can get that process started for you. We do this each week. It's always our goal to give you the real information. And, as we demonstrated in that first segment, the headlines are often misleading because the same publication on the same day said interest rates have topped out, and then the article, 2 articles below it said interest rates rocket back past 5%. So I don't know how you guys are out there making sense of it because we pour through the data each week to bring you the show. And sometimes I'm walking away scratching my head. But hey, I just wanted to say thanks. Thanks for joining us. Dom and I always have a good time doing this. If you need us during the week, give us a shout on the Anytime Hotline, 855-462-7292, 855-462-7292. Check out mrmortgageradio.com. That's mrmortgageradio.com, or the Facebook page, The Mr. Mortgage Show. You guys have a fantastic week. We'll be right back here next week, same station, same time. Be good.
That's a wrap. Join mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.